So we're now getting into the processes section. This is going to be split into two. The first section is going to be the Asia liquidity run section, and we're going to run through that whole strategy, which is perfect for early morning trading in London time zone. So between 7 and 10 a.m., 7 and 9 a.m. primarily, UK time, this is when this trading strategy is going to be applicable. When we've done this, I will be going through standard intraday trading. This is the easiest and best system for the intraday work. But if you want to trade in the New York session or later in the London session or throughout the Asia session, if you are based in one of those time zones, then that section is going to be for you. I'm not just teaching you one dead set system and then leaving you to it. I'm going to teach you this system, which works very nicely. And then I'm also going to show you the overall process of intraday trading within that second section. So when we come to the Asia liquidity run trading, we have a 5-step system. The first thing we do is find the range. Then we want to find any of the interest points around the range being the Asia session range. After that, we want to wait for a sweep, either to the upside or downside. Then we wait for a return back into the range, and when we have the confirmation, we want to find our execution. So what I'm going to do is show you an example from start to finish on a few different liquidity run trades. So first of all, we're going to look at a trade that I took very, very recently to record in this video, which was a lovely Asia session short on Euro USD. So bear in mind that the majority of these trades, or all of the trades I show you, will be on Euro USD and GBP USD. In my personal opinion, these are the two best pairs to trade if you are going to be trading this strategy, this system, and I do advise just refining your list to these two and sticking to them if this is the approach you're going to take to your trading. So here we are on Euro USD. We are just at the close of the Asia session. This is around 7 a.m. And what we want to do is, first of all, wait for that range to finish. So this is the final point of the range. And then we want to mark the high of the range and the low of the range. So if you're active at around 7 a.m., if you come to the charts for 7 a.m., that's the perfect timing for these trades because you're coming in when the London session opens and when the Asia session closes. Now that's UK time, maybe different in your time zone. Europe is going to be around 8 a.m., I believe. And then obviously if you're in the US, it's going to be a wildly different time. But we want to come in when the Asia session closes, and that's when we want to really become active on our trading. Now, after the Asia session forms its final candle, we want to mark off the high and mark off the low. What we are now doing is waiting for a sweep one side or the other of the range. Now, I also said you want to find any high interest points if they are applicable. In the previous example I showed you on liquidity runs, I showed you that the price reacted to a demand zone and then started to push into the range. Now, this isn't always going to be the case, so you don't need to worry too much. This is a very session-by-session basis trade, and what we're really doing are just looking for a clear sweep and then a push back in. Obviously, if we have other areas of interest like supply or demand zones around, that can help us to find a better execution. But generally, all we really need is this, okay? All we need to be able to see is this that we have on the chart right now. Now, bear in mind as well, time frame wise, we are just going to be looking at the 5, 3, 1, and below. So we are looking at the 5-minute chart, 1-minute chart, potentially the 2 or 3-minute charts. That is where the discretion comes in, but I will show you that. And then if you want to, you can even go to the 30-second and 15-second for prime executions. So now that we have the range plotted, what we are doing is simply looking for a sweep. So now we can just sit and keep an eye on the charts. Now, as we can see, we have a little bit of bearish structure forming here, but because we haven't had a sweep yet, we are not interested in this. For us to be interested in a trade, we want to see this kind of action, and that is where we would then look to execute a trade. So we just wait, be patient with the market, and as we actually see here, we get a breakout of the range above. So we can monitor this on the 1-minute, the 5-minute, whatever you want to look at it on. So we can monitor this on the 1-minute, the 5-minute, the 3-minute. I think it's best to actually have a look around the different time frames. The 1-minute is actually the good place to be because here we can actually see every single candle happening individually to determine whether this is the good sweep or not. And as we see, we have had an initial push out of the range, but we haven't yet had a serious breakdown. So we need to see some structure breaks before we actually go executing positions. Now we can actually mark on the most recent significant structure level, which in this instance will be this wick here. If we see a break through that, that is where I'll then like to actually come into the market. Now, why is this the high interest point? Well, if we look at the structure, we have here higher high, higher low, higher high, higher low, higher high, higher low, higher high. So we're just looking at the most recent higher low in the trend, which obviously is going to be this point. So we can keep an eye on the markets here. And as we see, we do get a nice breakdown. We can see that a lot of weakness has come into the market. And if we shift over to the 5-minute time frame here, we can actually look at the 5-minute levels as well, which is going to be this one here. So if this broke, that would give us extra confidence in the trade. We see at this point we did get a breakdown. We can then begin identifying a range, because what do we have here? We have the higher high, higher low, higher high, lower low. So now we've seen a sweep and we have seen the market form that standard pattern that we like to see. So obviously we are looking for supply areas to then sell from when price comes back into it. So this is where the discretion comes in. Oftentimes you'll want to find the zone of interest on the 1 minute time frame, because this is where you are going to get the best executions. But sometimes it's best to actually look at higher time frames. So you actually have to have a look around and decide which is the best area to sell from. Now, as we can see here, we don't really have any zone of interest through here. The zone of interest for this trade would potentially be at the top if you're looking at the 1 minute. But another thing to consider is this area here, where we actually had the push up and then breakdown from. Now, this is something that we call a breaker block or a breaker area. This is not something I personally trade massively, but when I see it in an instance like this and there's no high interest zone until the real extreme, and oftentimes in the sweeps we are not going to come all the way back to the extreme, I am then going to consider this breaker area. So what is a breaker area, real quick, just so you are in line with what that is? Well, a breaker area is an area in the market where a demand zone has now turned into a supply zone, or on the flip side, a supply zone has turned into a demand zone. Now, I never want to execute off a breaker, so I would not actually go and put my sell order here like this, because this to me is not so strong as, an extreme zone like this. But what this tells me is that it is possible that we are going to come into this area and then react without fulfilling this one. So that's when I may want to look towards some of the other time frames to actually determine if there's a better place for me to enter than this area, because this risks missing the move. It's very far out and it's actually above the Asia range. So if we do put our order here, it's possible we're going to miss the move. So looking at the 5 minute time frame, this one seems the most fitting to me, because if we look at the current range that we have, we can see the breaker area is at the bottom of the 5 minute candle and the extreme is at the top. So what we could go ahead and do now is just mark on this 5 minute zone. And here we can see a clear supply area at the top of that nice formation that we like to see. We have our structure confirmation now, we had the sweep, and now we can actually look to place an order to sell down. So when we use a slightly higher time frame like this, the 5 minute, we are not going to have such good risk reward, but we will have really nice risk reward regardless. And it's better to go with the more conservative approaches where we are likely to get a very nice winning trade, even if the risk reward isn't as great as, a 1 to 5, 1 to 6, 1 to 7, 1 to 8. So in this instance, we have the potential for a 3.6R trade. But as we know, the Asia session sweeps are a very common occurrence that come around nearly every day. So just think if you could nail a 3.6, say 3 days a week, that's around 9% a week, or a 0.5% risk, around 5% a week, which obviously is a very good amount of profit to be making. So we can set our order on the bottom of the zone, remembering what we spoke about earlier in the course. The midpoint is a good place for executions on the 15 minute and above, but anything below the 15, we want to use the bottom or the top of the zone, depending if we're selling or buying. So we place our order on here, stop loss just above the sweep, because if the market pushes above the sweep, then that is not going to be a fulfilled sweep, and basically it's probably going to either continue this way, or it may go through another sweep. So if we push over this high, the trade is essentially invalidated until further notice. So we put the stop there, because if the market does pass that level, we don't want to be in. And then as long as the supply maintains the price, we will actually get the nice push down that we want to see. So playing the price out then, we see another little sell down, but then we get a pullback, we tap into that level on the 5 minute time frame, and then we begin really selling off. And as we can now see, we get a very quick sell off towards the Asia low. And if we tally this trade up, that is a 3.6R position secured within execution at that minute, closure at this minute, 26 minutes. So that's a potential 3.6 or 1.8% profit in 26 minutes, depending whether you're risking 0.5% or full 1% risk. And as you can see, it's a very, very clean and easy setup. We don't require too much use of all of the previous price action. We just want to focus on the range, and then we focus on what we know about structure, supply and demand, imbalances, and liquidity to execute good positions like this. The liquidity comes in when the high is swept, and then when we get a sell-off, we normally get an imbalanced supply zone, so that's the supply and the imbalance, and obviously we only want to identify these things after a break of structure. So everything we've spoken about together so far comes together here, but in a very small time frame bracket, which is what makes these so simple and so effective. So we got the push up, we got the pull back, we got the higher high and the sweep, we got the breakdown and lower low, Then we pull back into the supply zone after the sweep and we get an execution and a 3.6R position secured in 26 minutes. Now, for these trades, I'm always targeting the Asia low. You will see in this example that the market extended considerably further, but a lot of the times, such as the previous video I showed you, we are just going to get a push like this. And that happens more often than we would like to actually risk. So it's better, in my opinion, to just take the profit here and not be greedy than it is to hold on. Because sometimes, yes, you'll get a big move like this, but more often than not, you're going to get a pullback and then you're going to have to end up closing your trade in a very small profit or even maybe break even, or if you don't manage well enough, potentially even a loss. But targeting the Asia low or the Asia high, depending which way you're sweeping, is definitely the set target that I will go for time and time again. And that right there is the Asian session liquidity run trade system. Now I'm going to show you a few more examples in this video showing the top-down process, and we'll have more examples later as well. Now for the second example of the Asia session liquidity run trades, we are back on the charts. We're going to follow out the same process once again. First things first, we want to identify the high and the low of the Asia range when the Asia range is coming to a close, which is around 7 a.m. UK time. Obviously, if you use the FXN Asia session range, it's going to tell you what times you need to be doing this trading. And when we see a closure of that range, we then want to mark out the high and the low so we know where we are looking for sweeps and where we are looking for targets. Now, an important thing to consider, and something quite useful and interesting, is when we are trading this, we are simply looking for a sweep of the low side and the upside liquidity. What that means is we don't have to worry too much about the previous price action. Sure, if we have some interesting demand zones, supply zones, areas like that to the left of the Asia range, we can use those for extra confluence on our trades. But for the most part, we don't need to worry about all of this. So even if we scale out on this one, you'll see the market's trading in a horrible range here. This is barely tradable if you are trying to consider all of this previous price action. But because we are just looking for the sweeps, we don't have to worry about that. We can simply focus on the current range at hand. So in this example, then we have the high and the low marked. We have no real areas of interest to the upside or downside. So we will just be focusing on the immediate structure to see if we can get a nice sweep. And if we can, then we should be able to get a nice trade. Now this side is looking like we are going to be going for a buy opportunity because the market is actually leaning to the downside coming out of the end of the Asia session. And if we then let price play out, we see we do get a push below. Now, then we get a little pullback in. Now, obviously, we want to focus on structure. So we don't really want to execute a trade unless we can surpass a meaningful structure point, which, as we can see here, is quite far off. So if this passes by, we can actually then look towards this area for buys. But as we see, the market actually continues to sweep down. So what we've done here is form a new lower low and a new lower high. So we can actually bring this tool to here and begin focusing on this structure point for our reversals for the sweep. Now, it's important to remember this is not always going to work. Sometimes we will just sell off out of the range and not return. So when those days happen, don't try and chase things. Don't try and force things. Just let it be. So what we've seen here is once again another lower low, another lower high, another lower low, and then another lower high. So we're pulling down now to form another lower low. We could actually bring some focus on this area now because this is the lower high. Though before executing any trades, I wouldn't want to see this. I would actually want to see this kind of move where we pull ourselves back into the range. We don't want to execute unless we are trading within the range. So now we've seen a break of this structure on the sweep. We could go to the 1 minute time frame and assess the situation down here. And what I can now see is we have lower low, lower high, lower low. This is kind of an equal high area here. So we're going to class this as the higher high, a push up from this level. So if we allow the structure to now form, we don't want to buy into this yet. We want to make sure we can actually continue uptrending. So what I would like to see here is a second break of structure. That's really going to indicate that we are pushing back into the range with some strength. And then we get another push up here. And the market has just about cleared that high. So if we pull this down to where the high there is, we can see the high here has now been swept. Also, when we're trading intraday, we can actually account for wicks as well because we are looking at the order flow. So the fact that the wicks have formed here shows me the market has some willingness to actually move higher. So what we can do at this point is identify the demand zone that formed the break of structure, which in this instance is going to be this zone here. We can then go ahead and place our order on this level with a target at the Asia high and a stop loss just below that recent low there. So this is going to be a bigger trade. This is going to be around a 6.5R trade. Now you could actually extend the stop if you really wanted to be cautious about it. But because we're following market efficiency, we can safely put our stop losses around here under this low because we should be able to get a good trade anyway. So looking at this position, we are going to go with a 4 pip stop, 25 pip target. That is a 6.1R trade. And if we let this play out, we should see a tap in to the entry level. And then very, very quickly, we get a little reversal. Within around 5 minutes, we start moving away from that entry point. And at this point, we've passed some structure points, so we could go ahead and manage the trades. We'll talk more about management on the low time frame soon. But following on, it's very similar to what we spoke about before. We could go break even at this point. We don't need to hold risk. A little bit of consolidation, and then the market is going to begin making some upside moves. And now we could actually go ahead and manage our stops to follow price up. So in an instance like this, the market does indeed come down and clear out that stop. In this instance, you would have been closed out for around 1.5R, 1.25R profit. So if you hadn't managed the stop and you actually just left your stops exactly where they were at the start point, this would have been a profitable trade all the way to the full target, which you'll see in a moment. I know this because this is a trade I took. I actually ended up manually taking profits around this area, very fortunately, because I saw a reaction on the low time frames. But more often than not, it's probably best to actually keep this systemized. Okay, you can bring discretion in when you are better understanding of the system and when you've learned how to put it into action in the real markets and got a bit of experience doing that. So in this instance, yes, we did pull down. We wicked back into that area there, which would have been a break-even trade, which is why it's good to manage. But obviously testing will tell you maybe you're better off just holding your risk. And then we got a nice push up. But the good thing about this is we actually got another entry opportunity after this push up. Because basically we came in, we retested this zone, and then we had a small break of structure here on this time frame. So because we know the direction of the market and we can see we're still clearly forming higher highs and higher lows, we can actually look to get back into the markets for another opportunity. And if we see a nice break like this, where we have a nice push up over the previous structure point, we could then look towards this higher low area for a potential buy. So we can go ahead and use the same concept as usual, buy with a stop below, target into the high, and then we can place our order on and let it go and see what it does. Now that is the beauty of the Asian sweeps. We see the sweep of the low, we have a sweep of the high in mind, so we can actually just follow the structure. If we get stopped out once in profit here for 1.25R, as we did, that doesn't stop us. That means we can actually come back and find a new opportunity to ride it up as long as that trend stays intact. So we can see here a little bit of messing around, but then the market does begin to actually take off, and this is where we then get that final push towards the Asia high. So this is a trade that takes longer to play out than I would have liked to see usually, but we can actually just hold these trades when they're managed and leave them to run while we go about our day. So it doesn't mean you have to sit and stare at the chart every single minute all the way through from 9 a.m. or 7 a.m. to midday. You can actually just execute the trade, and when the stops are managed, you can then go about and do what you need to do. So 7 to 9 a.m. is the prime trading hours for this kind of trading. I said 7 up to 10 as well, so we can see from 7 a.m. through to 10 a.m. here, which is where you would have got your secondary execution just before that time. And then when you started to see a move away, a couple of breaks of structure, you could have gone to break even and just let this run for the day. And that is another example of the Asia session liquidity sweep. And I wanted to highlight this one. This is actually one that I took myself. And it's also one that shows, that not every trade is going to be perfect. Some of them will get closed out early, but there's always an opportunity to get back in on a secondary entry. So I thought that was a useful one to highlight. So we have essentially just covered the whole Asia session system. It's not a super difficult one to learn. When you have the concepts in mind that I taught you in the first section, it's a very easy system to start applying to your trading. It's all about market timing, and it's all about following the movements of the session characteristics. There are a few things to keep in mind when we are carrying out this system. First of all being that we always need to keep in mind the entries and the structure and the other concepts we spoke about when it comes to actually finding our setups. We never want to just buy blindly into a breakout beneath the range, and we never want to sell blindly into a breakout above the range. We need to make sure that the market is going to return to the range before we start executing trades. So as you can see in the example we just spoke about, rather than just buying blindly in at this point, or buying blindly in at this point, or even going for a position at this point where we saw this first small break of structure, we want to make sure that a trend has established back into the range. So we wait for the shift from lower lows and lower highs up towards, from the low point here, higher highs and higher lows. And when we have higher high, higher low, higher high, that is when we can then start executing into the position. And if it turns around on us, we can obviously get out managed, or you can just get out break even, and then you can continue following the trend while it's still intact and potentially find new opportunities. So you need to make sure that you're always bringing in the concepts we've spoken about so far in terms of structure, liquidity, and supply and demand, as well as market efficiency, to actually execute these trades rather than just blindly buying or selling into breakouts of ranges, because a lot of the time that is going to get you burned when the market extends further than you expect it to before it returns. So the biggest talking point to begin with is always wait for a return into the range. Now, the second thing is, how do we find the entries? Well, I've showed you the examples and I've showed you the process, but the entries are always going to be from imbalanced supply or demand zones. And we are always looking for that standard structure reversal. And remember, all of these trades are essentially reversal trades because we are looking to catch a reversal into or out of the range. We're always looking for a push above like this, and then we want to see this price action to either sell from here or here, depending on what the market is telling us. But generally, the second point is going to be the one we are executing from. But you also need to keep in mind these structure reversals we spoke about. They're going to be very important and very useful for finding your setups, and that is how we're going to execute the majority of these trades. Market efficiency is also very useful and very important for finding entries because we always want to enter from the inefficient areas. So we see here we had this inefficiency left open. So rather than buying here, we brought down here because this was the inefficient zone. We are also looking for the zones that broke structure as the areas to buy or sell into the market, as you have seen so far in all of the examples I've showed you, and as you will continue to see in all of the examples I show you moving forward. Once again, we have this imbalanced area left open, and what did the market do? It came and filled into this zone before then making a new shift to the upside. So we are always using the zones that broke structure, and we are always using imbalanced zones for our entry execution. Most of the time, we are not going to be manually executing these trades. The only time you'll manually execute is if when you come to the markets, the trade is already ready. For the most part, we will be using buy limits and sell limits on the imbalanced zones that broke structure. And another thing to consider is if a zone has been retested already, we are not going to be using that zone for an entry because it's likely not going to be tested again. Now, there is one case here where that actually did not ring true and you would have got an entry there, but we only want to focus on fresh zones. So if we have seen this movement, we would be looking at this zone rather than this larger zone, okay? Now for stops, where do we want to put our stops? Well, because we're following the trend, we have two options. We either want to put them under the low or above the high if we're selling into it, for example, like this, of the whole sweep. That is going to be the safest place to put your stops. But if we can wait for the market to actually kick into gear, such as in this example, we waited for that second execution just here, we can actually then use that level for our stops, which in this instance is going to be just under here. That is because we are now in a efficient trend, and if the market does push through here, we probably don't want to be in that position anyway. And what this does is allow us to double our risk reward still while keeping a logical entry and a logical stop loss placement. And for Asian sweep trades, where is our target? Well, always the opposite side of the zone. If we are buying into the Asia range, we are looking at the top of the Asia range zone for our target. If we are selling into the Asia range, we are looking for the bottom of the Asia range to take our targets. We never want to extend further because while we can do that sometimes, a lot of the time we are going to pull straight back into the range. Not sure what happened in this example. Let's take a look. And what that's going to do is actually give back most of the profits that we secure on the movement. So while sometimes it's going to work out, it's best overall for you to just get in and get out within the boundaries of that range so that, you don't end up caught in a movement like this where the market starts turning against you and actually making very little movement once it has swept the liquidity out the side of the range. So the targets are very clear. The entry system is very clear. Stop loss system is very clear. And all in all, this is one of the easiest to learn and easiest to apply strategies for your intraday trading. Now, I will be showing more examples of this system, and there may be a few other talking points on it as well. But for the most part, it's all around just seeing examples and then putting it to work for yourself, backtesting, which we'll get into very soon. From here, we're really going to get into the everyday day trading approach in terms of standard structure trading through London and New York session or Asia session if that's the time zone that you trade. So this is a system that I definitely recommend you put into action if you are looking for intraday trading and if you are around in the London session. I think you can bring in some amazing profits by following this system, and I do think that this is a very consistent and effective system to actually master if you are just looking for a single simple system that you can repeat day after day, week after week, month after month, and year after year. So I hope you've enjoyed this video. I hope you've learned a thing or two, and I will see you in the next video.